Hello, everyone. Thank you so much for attending our webinar today on Proposition 19. My name is Sasha Preston-Suni, and I work here with Chugh CPAs LLP. I'll be moderating our discussion today. We are a full-service legal, immigration, and accounting firm with 6 offices across the United States. Proposition 19 passed by a narrow margin in November. Soon the proposition will go into effect, with older homeowners standing to gain tax benefits, while children may miss out on huge tax savings in real estate inheritances. We've got a great multidisciplinary panel of experts here with us today. I'd like to welcome 2 of my colleagues. We've got Komal Kabra, CPA, in our Cerritos office, and Varduhi Danielyan, attorney in our Cerritos office. So let's get started. There's some confusion around what Proposition 19 entails. Komal, could you please give us an overview of the proposition?
Sure, thanks, Sasha. So, approved by California voters in November 3, 2020 election, Proposition 19 marks a landmark change to Proposition 13, 1978 law that aims to limit the property taxes. On November 3, 2020, California voters narrowly approved Proposition 19, and with it come significant property tax changes for California real property owners. Proposition 19 would allow anyone over 55 or severely disabled or the victim of wildlife fires to move into a new home, but be taxed based on their old assessment. In most instances, a California homeowner over the age of 55 or with severe disabilities will have the ability to transfer their current property tax assessed value, the base year value transfer of their primary residence to another primary residence anywhere in California. This eliminated the distinction among the counties on which would approve a base year value transfer.
Thanks for that, Komal. Now, Proposition 19 has some winners and losers. Certain California homeowners stand to benefit from Proposition 19. To understand how, first we need to talk about existing law Proposition 13. Komal, could you explain Proposition 13 for us?
Yeah, like I mentioned earlier, Proposition 13, the 1978 law, aims to limit the property taxes. So as of now, in most instances, California homeowner over age 55 or with severe disability will have the ability to transfer their current property tax assessed value of the primary residence to another primary residence anywhere in California. Whereas Proposition 13 did not allow us for such transfer. Moreover, the transfer was restricted as per Proposition 13. So Proposition 13 rolled back to most local real estate assessment to 1975 market value levels, and it limited the property tax rate to 1% plus the rate necessary to fund local voter approved bonded indebtedness, and limited future tax increases to a maximum of 2% per year. Moreover, it allowed transfer of properties among several specific counties. And there have been few changes by Proposition 19, which we can discuss later.
Proposition 19 takes these tax benefits even further for certain California homeowners. Komal, how does Proposition 19 change existing law for California homeowners?
So in 1978, California enacted legislation designed to keep property tax low. The state voters passed Proposition 13 to cap property tax on a property value at 1% of the sale price. And the property tax can only increase a maximum of 2% per year. Thus, California property owners are paying property tax based on the price that they originally paid for the property. The price is typically much less than what is actually valued at today. As a result, if a home value increases significantly, a property tax can only go up to 2% a year. For older California, as they age, this becomes an even better idea with the rise in California property values. However, without Proposition 19, seniors did not want to move from their homes, and they would be paying higher taxes if they purchased a new house.
Thank you for that, Komal. So one great thing that you kind of touched on about Proposition 19 is that homeowners can buy a more expensive home and still take advantage of tax benefits?
So for the property owners aged 55 and older, they will be able to blend the taxable value of their old home with the value of a new, more expensive home, which will result in positive property tax savings. This change also allows individual to purchase a more expensive property rather than just a less expensive property and keep the benefits of the base year value transfer. If a more expensive primary residence is purchased, there is now a formula to minimize the increase in base year value. Eligible homeowners may now transfer their tax basis anywhere within the state and to a property of greater value, whereas previously homeowners were limited to transfer within certain counties and to homes of a same or a lesser market value. So, Proposition 19 increases the number of times that a certain people may transfer their tax assessment. If a person is 55 years or older, has severe disabilities, or lost a home in a natural disaster, the person may transfer their tax assessment up to 3 times now, which is up from 1.
Thank you, Komal. Could you give us an example of how taxes are calculated under Prop 19 when a homeowner that qualifies under the proposition buys a home of greater value than their current home?
Sure. So a qualifying homeowner who owns a home with a taxable value of 200K, that is worth 600K on the market, would pay $2,200 in property taxes now. If the homeowner moves to a 700,000 house, the homeowner would pay $3,300 a year in property tax under Proposition 19. So Proposition 19 would narrow California's inheritance loophole, which will be discussed further, and these changes would lessen the inequalities in California's current property tax system and raise property tax revenue to support local service.
Thank you, Komal. Now, children who are inheriting real estate stand aloof from Proposition 19. Varduhi, what is the current California law for parent-to-child property transfers?
Thank you, Sasha. Hi, everyone. Thanks for joining in today. So the current law for inheritance is in accordance with Proposition 13 and Proposition 58. Proposition 13, in accordance with Proposition 13, long-term owners have a much lower property tax rate than those who are a new buyer. And there is a simple reason for that, and that is that the taxes, as Komal mentioned, are assessed at current market rates when there is a change in ownership, unless an exemption applies. So, for example, if parents bought a house in 1970s that was worth, let's say, $100,000, they pay less tax because that tax is assessed at the value of $100,000. Even though the property value has changed, which means it is right now, could be, for example, $1 million, the tax still is low. However, once they sell the house to someone, for example, to me, and I'm not their child, then in that case, the taxes are going to be reassessed, and I'll have to pay a higher tax. However, if they leave the property to their child, the child can apply for an exclusion. And so according to the exclusion, parents can leave a primary home, so primary residence of any value. That could be any value. It could be millions of dollars of a house to their children with no tax reassessment required. And children are going to be very lucky because they are going to pay a low property tax. Each parent can transfer $1 million worth of other property types. So it could be any investment property, a rental property, and that since it's each parent, both parents together, it could be it is $2 million worth of other property. And again, no tax reassessment is going to happen. 1 million limit is based on the assessed value of a property, not the fair market value. So before February 16, 2021, which is, as Komal mentioned, the date where the Proposition 19 comes into effect, the child shall file a timely claim for reassessment exclusion between parent and child the child's taxes will remain at 1970s level, so the child will pay low taxes, and the child's tax rate under Proposition 13 can only go up to 2% per year. Back to you, Sasha.
So, Varduhi, thanks for that overview. How exactly will tax benefits change for people inheriting real estate?
Yes, so according to the new law of Proposition 19, there are going to be limits to the exclusion that I mentioned. And this aspect of Proposition 19 comes into effect on February 16, as mentioned. So according to Proposition 19, children who inherit homes from their parents, they will retain the tax break if they move into the homes themselves with some limitations. So they can keep the same tax rate only if the parents lived in that house, so that was a primary residence for their parents, and if after their parents died, they move into that house and live in that house as primary residence. This is going to create some complications if, let's say, children have siblings. That means that multiple children will be required to move into the same household and live together in order to apply for this exclusion. They will lose the tax break if they use the home as an investment property. So if, let's say, a parent used the house as a principal residence, and the parents, for example, have two houses. One of them is the primary residence. The second one is an investment property. But children are required to go and live in the house that was a primary residence for their parents. They can't use the investment property as principal residence in order to get this tax break. Parent to children transfers are not allowed with the tax benefits, except if a parent occupies the home as their principal residence, as I mentioned. Claim for reassessment exclusion between parent and child can happen after when there is a triggering event, which is the death of a parent. And after February 16, as of the date that Proposition 19 becomes effective, I want to bring an example what can happen. So the $100,000 home, for example, let's say your parents bought a $100,000 worth of a house in 1970s. That house is worth, for example, let's say $1.7 million now. Let's say your parents bought a $100,000 house in 1970s, and that house, let's say, is worth $1.7 million. When the child inherits that house, they must move into the house, as I mentioned. No tax rate will change. However, since according to Proposition 19, there is a cap of $1 million on top of the assessed value of a residence, this is what's going to happen to the tax rate, to the tax payments. The child will inherit the house. The entire property is going to be appraised. And as I mentioned, that entire property is now worth, let's say, $1.7 million. Since the former assessed value of a house was $100,000, the child is going to pay $100,000 plus $1 million. So $1.1 million will be assessed at the prior tax rate. The rest, which is going to be $500,000, that will be taxed at a reassessed value. So, and then also Proposition 19 has removed the exclusion of $1 million $1 million worth of other property. That is not available anymore. That was available under Proposition 13. Back to you, Sasha.
Thanks, Varduhi. Could you provide another example to help people understand how exactly taxes will be calculated for property inheritances under Proposition 19?
Absolutely. So now let's go over an example where a parent owns multiple properties. And then let's say the principal residence is worth $500,000. Which was bought in 1970s or in 1980s, and it was purchased for $60,000. And then they have two other properties, investment properties, which are each worth $500,000. So according to Proposition 19, for the principal residence, if the children agree to come and live in this house as principal residence, that their tax rate is going to stay low as low as it was for their parents, and it is going to be assessed at the rate. It is going to be assessed based on the value of $60,000, not $500,000. For the investment properties, property taxes will be reassessed because, as I mentioned, no exclusion remains for any other property. Thank you, Sasha.
Thanks, Varduhi. Can individuals do anything to take advantage of the current inheritance laws before February 16th?
Yeah, absolutely. I think as probably everyone now says, there is a lot of money at stake, and the question remains whether you should transfer property to your kids if you are a parent, and whether you should do it before February 15 to protect so that Proposition 13 should apply. So the answer to it is yes and no. To be honest, it will depend on your individual circumstances. That is why I would highly recommend that you book a consultation with Chugh. We are here to help you to see what are the pros and cons of the situation. For example, if your kids are going to sell that property anyway, which means they are not going to pay taxes on the property for years and years, maybe it does not even make sense to transfer a property for now. But again, it will depend on individual circumstances. So please do book a consultation to see what needs to be done. We can also help you decide what other property you have and how it's going to be taxed according to Proposition 19. And then you can also contact us if you need to, plan your tax bills, current estate plan, basic assets, and whatever you have gifted over your lifetime to your children. Thank you.
Great. Thank you, Varduhi. Thank you so much for joining us today. If you have any questions or you'd like to schedule a consultation, please feel free to send us an email at info@chugh.com. That's CHUGH. Or you can email one of our presenters directly using the contact information on the screen. We have live webinars each week on Paycheck Protection Program loans and other COVID-19 resources. Please visit our website at chugh.net to register for an upcoming webinar. And please also check out our YouTube channel, Chugh LLP, where we post regular video content to help small businesses weather the pandemic. Thank you so much to the Cerritos Regional Chamber of Commerce for having us today. We wish you a great week ahead. Thank you.